Buckle up, folks. The housing market has been on a run for the past few years, with rising prices and extraordinary demands. The National Association of Realtors reported that average prices in spring 2022 topped $400,000 for the first time. Even after a recent retreat, price growth was up to 28% since the pandemic began in March 2020, according to data from the National Association of Realtors. House price progression was in the double digits year over year every month from August 2020 through mid-July 2022, centered on home sale value data from Redfin. But at this time, as we look ahead to 2023 and beyond, a housing market crash is predicted in an economic recession, which is expected soon to occur in the United States. Many professionals are forecasting a housing market crash in the very near future. So what exactly is going on? And how can you prepare yourself if these predictions come true? In this video, we'll take a deep analysis of the data, facts, and figures, and explore the reasons that are driving these horrible forecasts and discuss some tactics to stay safe in this uncertain market. Many experts are forecasting that a huge housing market crash could occur as soon as this year. So by considering the risks involved, you can make well-versed assessments about the correct time to purchase or invest in a property. The key reason for this approaching crash is the soaring price of homes and the lack of proportionate salaries to keep up with these rising prices. This leaves first-time home buyers as well as existing home buyers feeling clutched in the market, which makes them vulnerable to the upcoming potential market crash. Furthermore, people are being priced out of the housing market in general, which is making investors skittish about the future of the market. Several factors could be contributing to this housing market crash, such as complicated lending standards, increasing interest charges, and extreme home prices. One other factor compelling a potential housing market crash is numerous properties being sold as investment properties. Although no one can precisely forecast the future, there are definite indicators that propose a crash may be on the horizon. But on the other hand, there is some harmony amongst economists, mortgage firms, banks, and real estate firms concerning whether the historically fitted U.S. housing market will reverse course in 2023 or not. It seems that the U.S. housing market will likely experience a crash in home prices in 2023, but the severity of this decline will depend on various factors, including the lack of housing inventory, different economic situations, the location, and many more factors. Let's have a detailed look at some of the distinguished forecasts made by the top companies in the housing market industry. But before we do, please hit the like and subscribe button if you are enjoying the video so far. According to Fannie Mae, it seems like the U.S. housing market will be struggling in 2023. The business anticipates both new and old home deal volumes to drop by 5.4% and 19.2% correspondingly. Moreover, the number of available homes in the market will remain low, as most owners with low stable mortgage rates will not agree to trade them in for higher rates and a limited supply to choose from. Fannie Mae also presumes home prices to endure a decline even in 2023 and 2024, following a 2.5% drop in the second half of 2022. The organization also foresees an additional 4.2% decline in 2023 and 2.3% decline in 2024. At the same time, according to the National Association of Realtors, home prices are predicted to rise by 1.2% this year. This forecast specifies a constant upward trend in the housing market. The National Association of Realtors expects that mortgage rates will plateau at about 6.4%. Goldman Sachs and Wells Fargo together have just made forecasts for the U.S. housing market in 2023, suggesting a decline in home prices. Goldman Sachs forecasts a significant drop of 7.6% from the top, whereas Wells Fargo expects a modest reduction of 5.5%. The accounting firm KPMG forecasted a drop of 23% from 2022 on existing home sales, which would be a decrease not seen since 2007. Home prices are predicted to fall between 7% and 10% in 2023. The S&P CoreLogic Case-Shiller Home Price Index is likely to drop another 8% in 2023, getting prices down to the levels of late 2021. According to Freddie Mac's first quarter Housing Outlook Pulse survey of 2023, 43% of respondents are confident that the housing market will continue to be strong over the next year, up to 9 percentage points from last quarter, but down 15% compared to last year. In terms of market activity, only 18% of respondents indicated they are likely to buy a home in the next 6 months, while 14% of homeowners say they are likely to sell in the same period. About 16% of homeowners plan to refinance in the next 6 months. Overall, while market confidence has rebounded somewhat, concerns over housing affordability and payment continue to persist. According to the CoreLogic Home Price Insights report, national home prices increased by 5.5% in January 2023 compared with January 2022, while on one basis, home prices declined by 0.2% in January 2023, equating to December 2022. The CoreLogic Home Price Insights report has estimated a decrease in prices every month by 0.1% from January 2023 to February 2023, and a rise every year by 3.1% from January 2023 to January 2024. Some states like Idaho, Montana, Washington, and Washington, D.C. experience annual drops in home prices, while other states like Florida, Maine, and South Carolina have seen significant yearly price increases. Miami, in particular, experienced the highest growth in home prices at 17.3% per year. The CoreLogic Market Risk Indicator also forecasts that Bellingham, Washington, is at very high threat of a severe decline in home prices over the next 12 months, along with other cities like Bremerton, Silverdale, Washington, Crestview, Fort Walton Beach, Destin, Florida, Salem, Oregon, and Tacoma, Lakewood, Washington. Generally, some national housing markets may experience a minor decline in the short-term market, but the forecast proposes a pickup again in the long-term market, though some zones could be facing a crash or decline in the next year. Freddie Mac's Economic and Housing Research Group, in its latest forecast to date, has predicted mortgage rates falling from a regular 6.8% to 6.2% in the fourth quarter of 2022 to 2023. The government-supported enterprise predicts that home sales movement will end at around 5 million units by the end of 2023. A decrease of 7 million to 5 million would reflect a decline of around 30%. They presume house prices to decline discreetly, but the downside risks are much because of the increase in unemployment. Therefore, the housing demand will continue to endure weakness in 2023, possibly causing a decline in prices even in the next year. The house price sales forecast was around $1.9 trillion in 2022, which experienced a huge slow of $1.6 trillion in 2023. With mortgage rates likely to remain high, the forecasted refinance activity seems to experience a slowdown from $2.8 trillion in 2021 to $747 billion in 2022 and $310 billion in 2023. Inclusively, it forecasts a total decline from the high of $4.8 trillion in 2021 to $2.6 trillion in 2022 and $1.9 trillion in 2023. Let's summarize the housing market predictions for the coming year. Buyers will get some leverage. Home prices are likely to decline. Inventory will increase. Some pandemic-era owners might face buyer's remorse. A sense of normalcy should return. Rates will continue to increase, and buyers will be pickier. Today, the housing market is far better than it was a decade ago. Throughout the 2 years of the pandemic, the housing industry flourished with the most substantial annual increase in single-family house prices and rents. It has been 2 years of historically low foreclosures and the highest number of sales in the last 15 years, calculating at around 6.9 million just in the year 2021. In these 2 years, even state home prices increased about 33%, and the market experienced a record low borrowing rate. Because of soaring interest rates and the more expensive mortgage payments since last year, the housing market is experiencing a cool down. But the question still remains, is the market going to crash this year or not? Nobody can confirm for sure that there will be a housing market crash coming in 2023. Rising interest rates are cooling the market, and it will likely remain that way or flatten out for the next 12 to 24 months, but eventually it will increase again. The housing market will endure a decline in prices, but not a crash. While right now it is concerning for some buyers entering the market, overall the market will persist resiliently and eventually be moving towards a balance. Although a housing crash is extremely questionable, all experts should keep an eye on indicators. Here are some indicators to keep an eye on to know when a housing market is likely to crash. 1. You can learn how this market operates. 2. Learn about when demand is fulfilled. 3. Watch for price decreases. In many housing markets, a huge demand for properties is emerging at this moment, and there just aren't enough homes to sell to respective buyers. Home building has also been growing in current years, but they are unable to meet the current needs. If buyer demand declines for any of the reasons mentioned earlier, that would be the likely thing to cause a market crash, but this doesn't seem to be happening in the near future. Thank you for watching, and please hit the like and subscribe button and let us know in the comments below if you think the market will remain strong or experience a crash.